6h passées de 12 minutes.
It is 12 past 10, and we will soon be taking a break, but before that, let us turn to our next panel. We are talking to you live from the Intercontinental Hotel in Paris. We have been talking about the political ambition and recovery plans and investment plans as well. We have been talking about the regulation framework. We have been talking about investors' appetite. And now let's turn to asset managers. How does all of that impact the offer? For our new roundtable, we have Pascal Lecause, Director General at Credit Mutual Investment Managers. How are you doing? I'm fine, thank you. Laurent Vidal is next, Director of Development at Ecofi. Oh, sorry, I skipped someone, I'm afraid. Jeffrey Nadal, thank you for being there today. You are Managing Director at FundGlobam. And Sébastien Dornano for Yomoni is with us as well. Pascal, we're starting with you. What have you noticed? You have been working directly with clients. So what would you say is the most striking behavior? Well, of course, this is a very unique period, and we're all hoping that it will not happen again. But I would say there were three phases. In March 2020, were the first stage, and I think that was reflected in the figures that we've just seen. It was a very knee-jerk reaction from the investors. There's a crisis, we don't know what's happening, we don't know what impacts are going to be, and therefore the knee-jerk reaction was to go to cash positions as much as possible to protect yourself. And that's something that we've seen in the figures presented by Morningstar. Second stage, markets are going down, and many investors are starting to think, and they think that maybe it's the right time to go back on market with opportunistic buy positions. And many investors going back to the markets. Third stage, quite quickly sometimes it overlapped with the second stage as well for some investors. A quest for meaning. Why do you invest? Performance, obviously, that's a huge driver, but beyond that, there was a lot of soul searching. Why do we invest? We're looking for meaningful investments, and that's something that we've seen in the third stage. It happened actually quite quickly in some cases. We've seen that at Credit Mutual. Distributors, it was said, are not mission-based, but it was not exactly true. At Credit Mutual, we do have such a mission for our companies, for distributors as well. This mission exists, and there was really a quest for meaning among investors for savings products, and that's absolutely in line with the values of our group. So those would be the three stages of the crisis that I saw. Laurent, what about Ecofi? What did you notice at Ecofi? Similar things, yes, definitely. And I would like to go back to 2015 and the Paris Accords. This is when we have seen an acceleration, an increase in sustainable investment, and with the passing of Article 173, and then the Pact Law in France in 2009. This is an action plan for the transformation of companies. The idea of this law was to put companies at the center of investment, so that retail investors in particular and pension-focused savings would be better taken into account. And then in 2020, this general movement of awareness and COVID, of course. And what we decided was to have an equitable weighting on environmental, social, and governance. We wanted to have an equal weighting of those three aspects because we think that for a fair transition, we need to take all of them into account. Because you think that in ESG there was too much E and not enough S and G. Exactly. So we wanted to see what the appetite of investors was for those different aspects. And looking at our 10 main collectors, we saw that 9 of them were very ESG intensive. Over 18 months? Did you have a record inflow for ESG? I would not say record inflow, but definitely an appetite for ESG investment. Sébastien, what did you see at Yomoni? What's this activity of robot advisor? We are in a unique position in that we are both a distributor and a manager. And we, of course, have seen the same trends in ESG, and we have launched a number of ESG products that are doing really well. During this period, investors, they wanted a lot of advice and support. And this was a very specific period for traditional networks. There was a lot of disorganization, and digital platforms really changed their activity. Because we were able to show that we were there supporting savers, supporting investors, we were able to demonstrate that because the period was so specific. So they realized that platforms were able to provide this service. And there's this fundamental trend in savings. There was this development that accelerated over the last 18-24 months. So platforms, among them Yomoni, are really coming into their own. And the other item that I wanted to talk about was ETFs. We have ETF mandates at Yomoni, and it's not very widely known in France. Someone mentioned a figure of 20% in Europe, but I think figures are much lower than that in France specifically. And now people are starting to understand those products, to know about them, and they have proven that they're very resilient. And the difference between active management and passive management was also an interesting point. We thought that there would be a real differentiation, and it was not so true. So that the criteria of fees is really the differentiator right now, because they can see that there isn't a real differentiation just because you're going to pay more. And more impact mandates as well? We launched our ESG funds in March 2020. We are still waiting for ESR label products. And once we had enough demand, this is when we launched them. And I would say that about 40 to 45% of our mandates now are label mandates. And huge actors, just like in the index-based sectors, have those labels. It really brings something to the table. We still have a lot to do on the data side of it. That has been mentioned already, but the offer for ESG products is better. It is less expensive. The analysis is more expensive, and the index part is less expensive than it used to be. Jeffrey, for Fund Square, from Luxembourg, what do you see?
Effectivement, alors, les actifs ont augmenté de 1200 milliards entre...
Assets have increased by 1,200 billions. We now have 6.5 trillion euros in assets. It's very interesting to compare the pre-COVID and post-COVID periods. In the US, in France, in Germany, in the UK, we used to have growth rates of 5 to 10%, and after COVID, 20%. 35% in France even, and in Luxembourg, 70% increase, 70% increase in stocks. So it's very interesting to see those differences. And there are a lot of restructuring and repackaging on ESG funds, definitely. Some managers also noted that they have a lot of projects in the pipelines. and they want to start those funds directly under the new classification. In private assets as well, there's been a lot of changes. We have a lot of managers that want to distribute their products through retail channels, and they're trying to innovate and restructure what they do. They want to be able to collect retail orders and to have access to bigger funds. There's a lot of shared tokenization as well. I think the situation in Luxembourg is very interesting because there's a lot of disruption, there's a lot of new technologies structuring those products differently. Is it comparable if you look at French Luxembourg funds, German Luxembourg funds, etc.? It's a bit difficult to compare them statistically, depending on the origin of sources that we have in the bases. We can see what the stocks are depending on the channel, French-based, Germany-based. I would say that the US channels today make up 20% of the stocks that we manage in Luxembourg. Then the UK, 17%, Germany, 15%, same thing for Switzerland. France is about 10.3%. out of the 6.5 trillion euros in stocks that I mentioned earlier. Pascal Lecause for Crédit Mutuel. About the Relance label, is it useful in your daily affairs? Do you see this appetite that we've been promised from individual investors?
Alors, c'est clair qu'il y a un intérêt de la part des clients.
I think there's definitely an interest from individual investors for the Relance label. We really have a good narrative that we can push with investors, and that includes institutional investors. When investors understand what they're investing on, it really changes things. It's been said earlier, it's really a key. Educating the investor, making sure that they understand the products. It's pivotal to the development of our industry. And the tech label, the Relance label, all of that means that investors understand better what they're investing in. And they don't feel that they're investing into a black box anymore with risks that they can't understand. Now they feel that they understand, know what's going on. And it's in line with our values at Crédit Mutuel, because we invest in and for all of France, all companies in all regions. And the fact that we have those direct funds, that's something that our clients like and understand. So this is a trend that we're keeping an eye on, of course, not because it's fashionable, but because it's in line with our values. Laurent Vital for Ecofi.
Comment vous aussi vous participez à votre niveau?
How do you also participate in this development of the offer? Well, there's the labels, of course, but beyond that, the new regulations make it easier to channel the funds in a more transparent way, in a more comparable way for investors. And that means that they can choose better. They can choose what they want in their investments. We are among asset managers that think that financial performance adjusted for risks is better. And there's a study by the New York University, the Rockefeller University in New York. They analyzed 1,000 projects from 2013 to 2020. And in 76% of those cases, companies that did take into account ESG criteria had better returns. And it's in line with our philosophy of investment. For us, performance, risk-adjusted performance, adjusted I mean for non-financial risks, it is better for those projects. That's something that we see, and it also means that they are more resilient, those investments. The trick is demonstrating it in our daily lives to investors. And that's the tricky part. We have extra financial indicators that we publish alongside financial indicators. So every month we publish those results, financial and non-financial results and risks. So for example, indicators on carbon intensity, the alignment of the portfolio to the max 2-degree scenario, tax transparency, tax responsibility, the participation of women in governing boards, gender balance, all of that. So all those indicators are there, we publish them and we explain them to investors to try and demonstrate that when they are investing in ESG funds or in an ESR fund, they are not just looking at financial investments, they also get extra financial performance. And it is meaningful. It is meaningful for those investments. All right. Sébastien, for your money, about resilience, if those performance were to deteriorate, what would we have? Today it's easy enough to choose ESG because their performance are higher than traditional funds. So you have both values and value for money. So I think that on the long term, ESG filters will be supporting performance. It will be improving the risk to performance ratio. And we are going to get the 2021 results soon. They will be different from what we had in previous years. We will then see will our clients continue to turn to ESG funds as much as they've been doing so far. Wait and see. But I think that what we heard for ECOFI was exactly the right way to do it. Sharing information clearly and also having a strong narrative to explain the reality of the impacts of those investments. If you cannot measure those impacts, if you don't know how they are concretely changing things, it's very difficult to be convinced that it's good.
Geoffrey pour FundSquare.
Geoffrey for FundSquare.
Là, encore une fois, vu du Luxembourg.
What about Luxembourg again? Same thing in your country?
Luxembourg, encore une fois, par rapport à
What is your appreciation of this?
Effectivement qu'on voit.
I think that we are witnessing the same trend.
Beaucoup de, net inflow.
In terms of net inflows on ESG, we have seen similar increase. In sustainable funds, I think we've had 120 billion euros increase in the first 3 months of 2021. But let's wait and see if that's a trend that is confirmed. We will need to be looking at the taxonomy and the normalization of criteria because there's still a bit of a confusion there. And we're trying to look at the ecosystems in Luxembourg to see how we can bring in scoring agencies and how we can better identify and qualify the underlying assets in those funds. Pascal, for the Credit Mutual investment managers, what about your portfolio of products? Did you have to change them, to update them? Did you work on this offer?
Alors, il y a un travail sur la gamme de fonds, oui, parce que...
Yes, of course, we are working on our range of products. Just a few words about what we do at Investment Managers Credit Mutual. This is the Center for Credit Mutual overall, but it's also the distribution platform for Credit Mutual Alliance Fédérale funds. So that we work with 7 different management companies, and that means that we need to harmonize the offer and the different solutions. That's one thing. But beyond that, In defining our offer, we first and foremost want to be in line with our values. That's really important for us. That's the first thing, really. And the second constraint that we have on our range and on adapting it, the second constraint comes from our clients. They expect solutions that are ESG solutions, that are impact-focused. That's an expectation from our clients. And that's good because it's in line with our values. So that we develop our offer and we adapt it, we update it depending on those expectations. The third thing, of course, is that we need to be in line with regulations as well. So that's an additional layer of complexity, including in the ESG approach, with the MiFID questionnaires that will be implemented from next year on. And it can be a way to promote such investments to household investors. And there's a lot of technical issues that I'm sure you're all very aware of, which is data exchange, measuring impacts, criteria that have to be taken into account. I think that we're all working on that right now, but it's a challenge to change our offers. Laurent Vital for Ecofi, same question. How is your range of products evolving? And since non-financial criteria, ESG criteria are important for you, how do you vote in general assemblies? That's a question that has been raised a number of times, that sometimes they say they have those targets, but their votes are different. In general assemblies, what we do is, statistically speaking, we have more than 40% of our votes that go against the resolutions that are proposed in general assemblies. But beyond that, our investment philosophy again is focused on the search for positive impact. And that means that we have two main approaches. First, ESG analysis is included in how we select those products. And second, we have a policy that we influence our partners. Because before you get to the vote, you have a dialogue ahead of time with companies to try and guide them into a positive approach, into a better approach, so that they will improve their day-to-day practices. And to try and answer directly your question, recently, in our investment policies, we have reinforced our climate policies, for example. And this reinforcing of this climate policy is based on calculating the carbon intensity of all our portfolios in Scope 3. Scope 3 being upstream and downstream of power consumption. So that's the most stringent scope. Yes, and we've decided to step out of conventional and fossil fuels before the end of the year. And we have just launched a fund that is aligned on the 1.5 degree scenario rather than the 2 degree one. And investors that turn to us, they are looking for this positive impact, and they want socially responsible investment. They want the most stringent criteria, and that means that they want the companies that have the highest levels of ESG policies. And of course, they want in health, in nutrition, in energy, in all of that, they want investments that will be socially responsible. Beyond that, Sébastien was already noting it, there are solidarity funds, the 90-10 funds, that make it possible to invest in many companies spread all over of France that have the solidarity label. There are labels with positive impacts, with social impacts that are positive, and there you can measure the number of local jobs that have been created. You can measure how protected parks and spaces have been better protected, etc. And that's something that you also offer, Sébastien, in the UK? Showing the impact of investment decisions, that's something that clients want. They want to know concretely what the impact is. Yes, that's something that savers want to see. It is complicated because you have to look at the whole chain, and we're not entirely ready for that. For index fund management, we have been looking in priority for those who do not have synthetic replication, because we want to know how the votes actually go, so we want to know that the management company is going to vote. And what is specific to index-based management, we work with Blackguard, Vanguard, and other of the same kind. That means that we do not necessarily have a very significant impact in their efforts, but we do look at their votings. And are you happy with that? No, not necessarily, but there's a little bit of everything. It's quite complicated again. There are interesting things that are being done, but you have to look in case-by-case scenarios. And BlackRock wanted to get rid of this responsibility and redistribute it to its investors, and that's a real point of attention. Do we need to have access to this vote directly or not? Otherwise, you can't really transmit this responsibility to the fund manager. So that's an interesting topic. And after that, of course, though, it's never going to be the actual saver that's going to vote. So we need to share this responsibility.
Jeffrey, to conclude, we've looked at some of the different product ranges, what they're made up of, the percentage. Well, there is the savings plan, of course, for retirement. It still works very well. People want something that's packaged, that's simple, that's managed by someone else, and they want to also have tax advantages. That's something that always works well in France.
Quelles sont les carottes, mot de la fin pour Jeffrey, qui marchent
And what are the carrots that work well in Luxembourg to attract savings?
Alors on voit toujours les RIF, structures non régulées, exploser.
The RIF have been doing very well.
Et beaucoup d'initiateurs choisissent le Luxembourg.
A lot of
ces avantages pour structurer ce type de produits.
People choose Luxembourg because we have structured products that are attractive.
Fonds de fonds spécialisés.
We have specialized funds, and we've seen that there's an increase in the non-regulated funds that are available for investors. There are also alternative funds that people seek out to diversify their portfolio. There are mixes of products that involve liquidities and non-liquid products. 27 European funds for billions of euros of assets. We have $1 million in liquidities and risk diversification. So it's interesting to see that I think we will have a lot of new investors coming along with innovative products, and we'll be looking for new liquidities on previously closed or restricted funds. Restructuration on the traditional product range, I think, is something that happens with regard to UCITS. I see that in Luxembourg we also have a real trend towards social investing as well. Thank you very much. Jeffrey Nadal, Pascal Decaux, Laurent Vidal,
et Laurent Vidal, directeur du développement des
and Sébastien Dornano.
Crédit coopératif. Merci à tous les quatre.